It's Wednesday, the 5th of October, 2022. Welcome to the Fast Five by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, 5 stories in 5 minutes. We've got quite a mix of stories today. Story number 1 is a big one. The Reserve Bank of Australia lifted the cash rate yesterday by a smaller than expected 25 basis points, which had a range of effects. It sent the Aussie dollar lower, bond prices higher, and added to the surge on the ASX.
Look, the decision wasn't totally unexpected, though it wasn't what most people thought. Most thought they'd go by 50 basis points. The Reserve Bank board said while more rate rises are likely, the official cash rate has jumped sharply already and, effectively, central bank wants to take a breather and see what's happening on inflation and economic growth. It certainly shows that the Reserve Bank, whilst maintaining its focus on inflation, is also concerned about growth. So what's it mean? Mortgage repayments are going up. Some lenders have already lifted their rates, but they're not going up by as much as most people thought. Rates are now 2.5% higher than they were at the start of May after 6 consecutive increases in the cash rate. What's that mean? You're paying about $1,000 more a month on a $750,000 mortgage. That amount includes about an extra $110 as a result of yesterday's rate hike.
All right, story number 2 is very much linked to story number 1, Sean, the reaction by local financial markets yesterday.
Yeah, look, they took off. The ASX was doing pretty well before the early afternoon announcement, and that was thanks to a strong lead-in from Wall Street. It then jumped again. By the end of the session, the S&P ASX 200 was up 3.6% to 6,688 points. What's that worth? About $81 billion in one day. Incredible. In short, investors were buoyed by the likelihood of fewer interest rate rises, which in turn shouldn't harm the economy and earnings as much. At least that's the theory. There was green everywhere yesterday. Materials companies did well. Tech stocks did well. Energy stocks, real estate investment trusts, some of the big guys, ANZ and Woodside Energy, both jumped around 5%. Commonwealth Bank and Macquarie Group were up 4.5%. Goodman Group jumped nearly 6%. And WiseTech Global, the big tech company, was up more than 7%. However, spare a thought for the Lottery Group, which is part of the demerged Tabcorp. It was literally the only stock of the top 200 to go backwards yesterday. There you go.
Okay, on to story number 3. And Telstra is now managing a cyber event of its own, albeit much smaller than rival Optus, with 30,000 current and former workers having their names and email addresses uploaded to the dark web.
Yes, this is the sort of story that everyone's really scared of. Now, it's not a huge hack. In fact, Telstra says it's not a hack at all. Apparently, a third party, which was offering a rewards program for staff, had the data breach in 2017. It doesn't involve any customers. It wasn't a breach of any Telstra systems. Still, it does show that everyone needs to be very careful about arrangements with third parties, whoever they are.
Story number 4, Sean, this is an interesting one. Almost half of consumers are apparently looking for more health-conscious options in wine, and as a result, Treasury Wine Estates is accelerating its push into low-alcohol or no-alcohol wines.
The owner of Penfolds and Wolf Blass said there's a global trend led by under-35s to drink wine with less or no alcohol. The challenge for winemakers is to make it taste better, really, and Treasury plans to spend up big in that area. It involves using a de-alcoholization technology that can replicate the mouthfeel, aroma, and taste of alcoholic wine. Now, Treasury already has low or no alcohol versions of its Wolf Blass and Squealing Pig brands. It's not only wine, Michael. According to the Financial Review, Endeavour Group, which owns Dan Murphy's and BWS outlets, says that low or no alcohol beer is one of its fastest growing categories, and it has 300 such products in its range.
Sean, story number 5, last one for today. Kim Kardashian has agreed to pay $1.3 million to settle charges with the US securities regulator for promoting a cryptocurrency without revealing that she was actually paid to do so.
I'm just delighted that Kim Kardashian has made her presence felt on Fear and Greed.
That's right. It's taken a little while, hasn't it?
It has. Apparently, she didn't disclose a $250,000 payment she received to post about crypto security tokens sold by Ethereum Max on her Instagram account. Now, she's pretty influential. She's got 331 million followers. When she posted, she had 225 million Instagram followers, and she said, "Are you guys into crypto?" The Instagram post then drew attention to Ethereum Max, which was a new coin at the time. It's kind of emblematic of a ballooning trend involving celebrity endorsements of crypto assets. The Ethereum Max tokens, though, shed 70% of their value a week after the post. That triggered a separate class action lawsuit that accused Kardashian and other celebrities of helping boost the coin's price in a scheme that benefited its backers, but not investors. That case is making its way through a federal court, and Kardashian has to pay a big fine.
Yeah, sure does. There we go. The top 5 business stories in 5 minutes. Thank you, Sean.
Thank you, Michael.
And of course, with another interest rate hike and the cost of living going up, you need to check out our new podcast with Canna Campbell from financial literacy platform Sugar Mama TV. It is called How Do They Afford That? Heaps of tips and hints about making your money go a little bit further. How do they afford that? Find it wherever you listen to podcasts. I'm Michael Thompson, and that was The Fast Five by Fear and Greed. Have a great day.